So you started your new LLC, or maybe you're about to, and you feel good about how you're going to go about starting that LLC and maintaining it properly. But then the dreaded T word pops into your head, taxes. How do taxes work with an LLC? Taxes can be stressful. Taxes can induce anxiety, and taxes can feel really complicated, and sometimes they are. But in this video, I want to simplify taxes for those of you who are starting an LLC or have an LLC in which you are the sole owner. And so in this video, I want to talk to you about the default tax classification of an LLC with only one owner, and I'm going to simplify how this works. Before we get into it, if you don't know me, I'm Neal Rice. I'm a longtime business attorney. I've helped over 1,000 people now start, build, buy, grow their business. And I want to do the same for you through Startup University. Now, let's get into it. Remember, when you start an LLC, you're starting a legal entity that is separate from you yourself. And when I think about an LLC, I always think about it as a box that you're going to do business within. So this box represents an LLC. So whatever your business is, you're going to go out there and you're going to provide a good, and you're going to provide a service, and someone's going to value that and they're going to pay you money in exchange for that good or service you're providing. Remember, that money needs to be deposited into your LLC's business bank account. Don't put that money into a personal account. That's a big no-no. And if you start doing that, that will risk breaking your limited liability protection. That's the protection you get for your for your personal life and your personal assets being protected from your business risks, okay? So when that money comes in, it goes into the LLC bank account. Well, guess what? They say it takes money to make money. You got to spend money to make money. So your business operations are going to cost money. So some of that money that's coming in, you're going to have to spend on reasonable and necessary business expenses. Okay? So we're talking about, rent for your office or your warehouse. We're talking about, paying employees or independent contractors to help you do what you need to do. We're talking about maybe some advertising, maybe professional services expenses, all those expenses that kind of come with the territory of running your own business. So that money goes out. Well, hopefully, and I'm sure if you're following what we teach here at Startup University, that the money that comes in will exceed the money that goes out. And at the end of the year, you'll have money sitting in your bank account, in your business bank account, and that'll be your profit. Well, the way that taxes work for a small business is that in almost every case, the profit that you'll owe tax on is determined on the calendar year. Now, you can elect to have a different status, but the default and the typical scenario is that profit is determined and taxes are determined based on your activity during the regular calendar year. So come the end of the year, December 31st, you will have made some profit. You would have brought in more money than expenses that you had to pay out. And so the question becomes, now what? Who pays these taxes? How does this work? The general idea here is that with a single member LLC, that this is what's called a disregarded entity. And that means from the IRS's perspective, it's as if this LLC doesn't even exist. Now, of course, we're going to respect the LLC from a legal, operational, structural perspective because we want to make sure that your limited liability protection remains strong and intact. But from simply a tax reporting and tax paying perspective, the IRS doesn't care that you have an LLC. They deem that to be your personal income. And so the way that happens is this income gets reported on your personal income tax return. Usually for most businesses, it gets reported on what's called a Schedule C. Not all businesses. Some businesses like farming, agricultural businesses are on a Schedule F. But no matter the business, there's going to be some applicable schedule. And in most cases, it's a Schedule C. And that's where you'll tell the IRS, hey, during this calendar year, I had this much income, I had this much expense, and this is the profit on which I have to pay taxes. So you'll prepare, or your tax preparer will prepare, your personal income tax return. And in this case, they'll include a Schedule C that'll show the business profit that you made. And this will get taxed at whatever your personal income tax rate is. And so that could be very different depending on the particular entrepreneur or business owner. So if you have just one business and you don't have any other job and this is your main income for the year, then whatever your income is on this Schedule C essentially, and of course you'd have some personal deductions or maybe you take the standard deduction, but bottom line is this income, your business income, is what's going to be driving what marginal tax rate that you're going to have to pay. For other business owners who maybe have a side job, maybe they have a part-time job and they run their business, so they have income from that source. Maybe they have multiple businesses and all those businesses are colliding onto their personal income tax rate, income tax return. They might have a lot more income that has to be accounted for. And so whatever your income is for the year is going to determine your personal income tax rate. The LLC itself is not filing a tax return. The LLC itself is not paying any income tax. This is all falling to your Schedule C on your personal return, and you'll pay at whatever your personal income tax rate happens to be for that year. Okay, so that's the disregarded entity status that the IRS applies to an LLC that has only one member. Now, this can be changed by election. Okay, so this is the default rule, but it can be changed. You are allowed to elect, even if you're only a single member LLC or one owner LLC, you may elect a different tax status like an S corporation tax status or a C corporation tax status. That's something that you need to talk to your qualified tax preparer about to analyze whether either of those options would be right and good for you. What I'm showing you here is the default rule. A single member LLC, one owner LLC will be treated as a disregarded entity. And these are the basics of how the tax will be reported and paid. Keep in mind, you may need to make quarterly tax payments. In most cases, you will. That's a whole nother animal. But here, I wanted you to understand the flow of taxes with a new small business, how this generally works. And I hope this is helpful for you to bring you confidence and clarity that you understand what you're getting into with your new business when it comes to taxes. Now, if you want to learn more, I've got a free planning tool I've created, and it's the Big Four, the taxes you must know as a new small business owner. If you want that, I'm happy to give it away for free. All you have to do is comment taxes down below this video, and I'll make sure you get it. Has this been helpful? If so, I'd love for you to check out my course, Startup University. Go to startboldnow.com. Check it out. It's where I take you from timidity and uncertainty and transform you to a business owner that has confident, bold action for your new business. Remember, there is life-changing power in a new business. You've got this. I'm right here with you. Let's go.